Welcome to the Bearable Traders Podcast, Talk with Traders. In today's edition, we will talk again with Dr. Jonathan Katz, this time discussing why attitude matters and how your attitude towards your trading can make all the difference to your success. Dr. Katz, welcome back to the podcast. It's good to be talking with you again.
Good talking to you, Peter, as always. How are you today?
I am actually doing very well. We had a long weekend recently. I had the opportunity to spend it with family, and it's always good to take a little break. As much as I love trading, like any work, it's always nice to take a little time and just not think about it whatsoever and do the important stuff with family.
Yeah, and get reinvigorated, re-energized, and then back up for another trading week after the long July 4th holiday weekend.
Exactly. We had sort of a little, I'm Canadian, so we had a Canada Day a couple of days earlier, and then which is a midweek thing this year, and then of course the July long weekend because the markets were closed. So I got a double bonus. It was fantastic.
Yeah. Okay.
It was fantastic.
Nicely done.
Well, this week we were going to talk about your attitude and attitudes in trading, because one of the things that I've been thinking a lot about this recently, because some of the members I was talking with, it's a tough time to sometimes have a good and positive attitude, and it made me think about, sort of how do you keep I don't want to say a positive attitude, because people tend to associate that with like somebody who's just perky and up. That's one element, but I think it's more important about attitude with respect to, do you have a confident attitude, and are you approaching trading in a way that's going to set you up for success? So with that, let me just start by setting maybe some basics, because when we talk attitude, there's a couple of things that, there's these traditional sort of components of attitude they talk about. So there's cognitive, affective, and behavioral components. They tend to call it CAB or ABCs depending on the order. So your cognitive component, if I can say it, are your thoughts and beliefs about trading or about the subject matter. The affective component is how you as an individual, how you feel, and how the event or how trading makes you feel. And then the behavioral is how your attitude influences your behavior, which at the end is what we're talking about here in trading. So those three elements, I think, can form maybe part of the start of our conversation, Dr. Katz. And I wanted to get your thoughts first on, let's start with the cognitive aspect. People come into trading, obviously, with an expectation that they're going to hopefully make some money and they're going to be successful at this endeavor. But even before you start, we all sort of come burdened with some beliefs, I guess, about what trading is and maybe about what it isn't.
Yeah, that's true. And I think, the thing about the cognitive, affective, and behavioral is that they're all kind of interrelated. Yeah. And let me just say, as a corollary to that, before we dive into that, there's also attitudes have an explicit component sometimes, which is the attitudes that you're consciously aware of and how that influences your behaviors and beliefs. But also, and this is particularly important in trading and the psychology of trading, and this is why we're talking about this, is that there's a lot of, implicit aspects of attitudes, which are the unconscious, but still have an, important impact on behavior and beliefs. So a lot of traders are not necessarily aware sometimes of the unconscious factors and their beliefs, which then impact their trading decisions.
Right, and that's a great point, and that's something I was going to lead into. So, and I'm glad you bring it up, because those explicit and implicit, and even back to where we were starting here, sort of on your thoughts and beliefs, you may not even be consciously aware of some of the beliefs you have around trading. So, if I'll use myself as an example, it took me a while when I was trading, and it was only after I started actually having conversations with other people that I realized they said, "Oh, trading? Oh my God, that's risky." I've got a friend's brother's cousin's uncle who lost everything trading, right? Shouldn't do it. It's terrible, man. Like, nobody can win. And I realized, after a number of those conversations, that in the back of my head, I thought, I have a very small chance of succeeding at this. And I realized that was making me overly cautious and overly, how do I say, like worried about my trading, as opposed to actually, focusing on the success that I was driving and my methodology and practices. I was like so afraid of failure because, subconsciously or implicitly, I had this belief that I was most likely to fail in this. So you better be really, really careful.
Well, yeah, so when we talk about attitude for trading, I think the concept that is very helpful is the concept of how do you develop a winning attitude towards trading.
Right.
I think this is a key to the success, and a lot of traders think that they already have a winning attitude, and very often that's actually not the case.
Right.
And I think, part of the first step of that is taking, again, responsibility and ownership and accountability for your trading, and understanding how your thoughts and beliefs, how your feelings and how your behaviors influence your trading. Because a lot of this is where the conscious and unconscious come in, because a lot of times, as you know, traders want to have a winning attitude, but they often show signs of not, by kind of blaming market conditions for their attitude or their state of mind. Whereas market conditions are just kind of really a mirror for how people mirror for how people trade. So I think a winning attitude is really more of a positive expectation of your efforts, and with kind of an acceptance of whatever results you get are really a reflection of your level of development and what you need to learn to do better. So I like to think of this as how, one develops this winning attitude with an understanding of the role of the different components, the cognitive, the affective, the behavioral, and the explicit and the implicit, and how they contribute to that.
So, and you bring up an extremely important point when you talk about the winning attitude, that I personally, anyways, believe is very important, about the accepting responsibility for all of the outcomes of your trading, both good and bad. And I want to get your opinion on this, Dr. Katz, because I find that we have a natural tendency, we humans tend to like to think when something goes good, it's because we're awesome. When something goes bad, it's because something happened to us. And that's a way I find of diffusing your responsibility for all of the outcomes, and good or bad, frankly, there are elements that we can control and elements we can't. We certainly see that in trading. I can control my entries, I can control my exits, I can control, how much risk I put at play, but I can't control the direction of the market. So, but I have to accept when I'm entering into this scenario, there are those elements I can control and elements I can't. But I have to take responsibility for all of it because I am making the decision to take the trade. Do you find, when you're talking with traders that, that those that tend to have that successful attitude take more responsibility, I suppose, for the entirety of the outcomes?
Yeah, I think that's why I said responsibility, ownership, and accountability. Absolutely. And a clear warning sign is right when people feel like they are responsible for the successful trades or the successful outcomes,
right.
But then on the ones that are not successful, kind of feel that that's due to external factors
right.
Outside of their control. And
right.
that's really a warning sign, because that's an indication of blind spots and an unwillingness, basically not a complete accountability of one's own trading.
Sure.
And so kind of, again, the combination to me of the responsibility, the ownership, and the accountability are huge in terms of building a kind of a positive foundation for this kind of growth mindset, as opposed to like a more fixed mindset that's a little more stagnant, that has a lot of sometimes blame kind of associated with it, and not the kind of the accountability, as you said.
Yeah. Now you touch on another key element there. Yes, that growth versus fixed mindset, which, as you say, sort of helps people define their success or not. We find that you need to have that growth type mentality. And now that growth mindset, as I understand it, Dr. Katz, is more about is I guess more about sort of sitting in the chair and saying, when I get faced with a challenge, whether I can affect it or not, sort of embracing that and say, all right, so I need to take some action in order to manage that, and taking it as a sort of a positive obstacle versus just an obstacle to be avoided. So, for example, I would say in trading, somebody with a positive mindset would say, hey, when the stock is not going against me, I can't control the outcome, but I have a rule in place that says my risk management says I will exit at this point, and I'm going to obey that because that's how I can positively embrace this challenge and create the outcome that I need to, as opposed to, you know what, I'm going to let it ride, or I'm going to average down. Don't ever do that. Or something like that, where you said instead of following the rule, you're just going to sort of avoid the obstacle by not exiting the trade, not accepting that loss at the moment.
Right. I mean, it's the growth mindset is basically at the core the concept of how do I get better?
Right.
Always looking to ways to improve. And like you said, not viewing bumps in the road, obstacles, setbacks, losses as problematic. I mean, they don't feel good when any of us experience as in trading or other parts of our lives. But it just means, like, how do I manage this more effectively? It's
Right.
like if you're driving on a road with potholes galore, and it's like if you're bitching and moaning every moment that there's potholes, as opposed to putting your energy into concentrating on the road and trying to drive that as effectively, missing as many of those potholes and making the ride as smooth as you can. That's a more positive, growth-minded way of driving under adverse conditions, where a fixed way is just kind of just looking at the kind of negative, not changing what you need to do, and just experiencing all of that, kind of those obstacles, in a way where you feel you have no control or power to make things improved or better.
And complaining about where your tax dollars are going and why aren't they fixing the potholes, right?
Right. Right.
Now, all this being said, sometimes it's easier said than done. I mean, hell, I've had days of trading where you're like, oh my God, the markets are aligned against me. It doesn't matter what I do, I can't win today. And I know when I started trading, it's funny, when I had those, it honestly felt like the markets are out to get me. Like, sometimes it just feels like they are out to get me. And I had to come to the realization that the reality is the market doesn't even know I exist. It's not out to get me. More likely, I'm probably just not in the mindset. It's not working today. Whatever it is, and sometimes you can't readily identify it. But but what is important, I think, at a high level is to identify the fact I'm not in alignment with the market. So I either need to step away and figure out if I can get myself in my mind in order to trade effectively, or maybe today's not my day, and maybe it's just time to shut her down and take a deep breath, go do something else, meditate, whatever, but come back another day.
Yeah, I mean, I think there's a tendency to want to attribute kind of poor performance to external factors because it's just a psychological defense. Because basically, when we do poorly at something, it can be very painful. We're disappointed in ourselves. Sometimes we're a bit embarrassed. There's a lot of factors that don't feel good. So a lot of people defend against it as a way of pushing it out, as opposed to acknowledging the pain and the discomfort. And then, like you said, stepping back a little and saying, okay, this hurts, this doesn't feel good, it's upsetting. But the only way you're going to overcome that is to see if there are corrective measures you can make in future trades to help the outcome become different. And that is a very powerful thing. So that's, again, getting back to this fixed versus growth mindset and the willingness. Again, this is also getting back to the implicit and explicit, becoming a little more aware of our unconscious actions and thought, is very important. We can look at our patterns. This is why to kind of take your own personal inventory, or what are the kinds of situations trading that trigger kind of very defensive or painful reactions. They're different for different people, so that you are aware of the kinds of situations where you may start to blame external factors, and it makes it harder for you to kind of own that and kind of develop an attitude, again, of growing and building in a kind of ascenting way, as opposed to being in a fixed mindset way.
Right. So, and as you talk again, I'm glad you brought it back to the implicit versus the explicit. So, when we have those implicit attitudes, we started sort of with the cognitive component. So, what are your thoughts and beliefs about trading? Dr. Katz, how do we go about unpacking that? So, how do we sort of, because I do think you have to unpack, you have to surface it, sort of lay it on the table, so to speak, so you can do something about it. Because if you don't, then you have no chance to deal with whatever your beliefs are.
Yeah, well, I think, this is where we've talked about journaling and keeping a log of kind of, monitoring your own emotional reactions to things. Again, you said embracing the challenges as an opportunity, as opportunities to learn. But I think part of it is that you have to kind of be willing to recognize when things are not going that way, what kind of emotionally that's creating for you, and what kind of thoughts and beliefs are you creating as a result of that. Do you feel like you're not smart enough, you'll never be successful? There's a lot of assumptions and a lot of faulty beliefs that can be changed, and this is where the cognitive component really becomes in, because how you handle the setbacks become very important. And success is often, and especially in a place like trading, which is highly competitive and difficult, is how you deal with failure. So actually, failure is an integral part of the trading process. It's very much like sports in that way. And
Right.
that the hope is that it's not that losing trades are a problem, it's what you do with them. But you have to be aware enough of your own emotional reactions to things so that it doesn't become debilitating, and you don't create these kind of false cognitive assumptions and beliefs, which then perpetuate and impact your, not only how you feel, the affective component, but also future behaviors.
I like it when you say that. We do a lot of sports analogies, because I love them, and they're sort of with your background as well. But I do think they're very applicable because, if you think about the most successful athlete in any sport, you can name any sport, they've never won all the time. Right? Like nobody's got an infinity to O record. Like it just doesn't happen. So even the best athletes on the planet have experienced significant amount of loss, and it's only through, like you said, through how they manage that they've achieved that pinnacle of success. The same is true for traders, right? I mean, some of the best traders in the world may only have a 50% win rate. I mean, I was listening to another podcast actually the other week where they said, this trader said, I had a 40% win rate throughout my career, which means that at some points I was down to 20%. Other points I might have been doing better than 50-50, but overall I was winning only 40% of the time. But the way I managed my risk led to my success. My point out of this is that our attitude around those failures, which is failure is inevitable, but that is really going to drive whether you're ultimately successful. So you need to have a good attitude towards your trading overall, and have the attitude, like you said, that growth mindset. All right, what am I learning from this? Yeah, it's pain. Like any loss is painful. We all get that, right? But you can't take it like, oh my God, I suck. This is never going to work for me, I think we're all prone to those thoughts on occasion, but it's managing them and boxing it, I would say, a little bit. Say, all right, there's a loss in this moment, but there was probably a lesson in that. Journaling is where you can figure out where that lesson is.
Yeah, and I think, working with traders, they can do this on a more micro level than a little more macro. Traders who have experienced very rough first halves of the days, and they're down a lot of money, and they start being able to maintain this kind of more positive forward growth mindset, and working through and grinding through, either getting back to even on the plus side. That is incredibly rewarding. Or traders who have had a bunch of, losing days in a row, and find a way to kind of get it together to kind of, snap out of that. Don't letting 2 or 3 losing days turn into 7 or 8. When I work with high level athletes, and I've said this to coaches and players, but a tennis player who is down a set and close to losing the second set, I said, I'm never happy that you're on the verge of defeat, but the ability for you to come back and win that match has been massive, because now it's in your DNA, the ability to come back from the kind of, from the precipice of defeat and come back, showed an ability to stay in a positive kind of optimistic, forward-thinking way to kind of get back in. And traders are the same way. The bad can beget the bad, and the good can beget the good. But I think that the greatest challenge, and what builds incredible strength and belief and confidence over time, is the ability to manage kind of those difficult periods and come back from them.
Right. So we're talking now essentially about the affective and behavioral components, if you will, and how you're managing those. Tennis is a great example because I've always found tennis, just the way it's structured. You're right. Like, you have to be extremely mentally strong to be successful in tennis, especially if you're down a set. And tennis can be a very big momentum game in that you find that, it just takes a sort of a couple of points for suddenly the momentum shifts, and sometimes you can't even put your finger on it. But you notice that I've noticed those most successful athletes on the global scale, or tennis players, they're the ones that they don't seem to get too phased by when they're down, but when they're up, you can see that energy start to pick up, and they sort of feed off of that, and they know when to press it when their opponent is sort of starting to feel the pressure a little bit, right? Now in trading you can't feed off the energy of your opponent, right? There's nobody on the other side of the net, so to speak, for you to face off against. But I do find that the traders with whom I've worked is those that, hey, when you're down, you say, look, that's just, yeah, so I had some trades. And you're able in the moment to do, I think, a couple of things. One, sort of manage your attitude to look at it and say, look, did I trade poorly? If I did, then I need to do something different than I traded well, but I had a bad outcome. And that's sometimes tough to do in the moment because we all get sort of emotional, especially when you've just had a loss. But to say, it was actually a good trade, it just didn't work out. Then you can continue and hopefully take the next one, and it may win or it may lose, but you need to approach it with the same attitude. If, however, you say, actually, that was not a good trade, to me, that's when you need to back off a little bit and say, all right, maybe I'm not in the right place right here. I need to reset that trading attitude such that I'm in a position to say, am I going to follow my rules? Am I going to trade maturely so that I'm not creating bad outcomes by not approaching this properly?
Yeah, it's interesting, actually. You brought that up. Quite coincidentally, right before we are recording this podcast, I just got off from a kind of a FaceTime meeting with a professional tennis player that I'm working with. And one of the things we were talking about was, getting geared back up to starting competition, which hopefully will be very shortly. But we talked a bit about some of the things that are very applicable to trading, which is getting back into competition. And now it's been a long time. And how do you kind of are going to be handling, right, the being in the lead, being down, all of that. And so one of the things that I've stressed is the importance of being flexible and creative and nimble on the court for this player. But also it applies to trading. It's the willingness to kind of, in the moment, seeing the trades, not get kind of too set in how you're doing something. Have a certain level of flexibility. Be nimble and be able to kind of adjust and see things. Be kind of creative. These are some of the habits kind of winning traders. Now, you want to be self-disciplined. That's critical. But you also don't want to become so rigidly adhere to a certain kind of plan if that is going wrong. Again, if you and I are playing a tennis match and I know you have a weak backhand, but today I'm kind of going for your backhand and you're hitting backhand winners back to me, it's like I have to have enough flexibility and nimble and creative to step back and say, I need to go to plan B. Traders need to do the same thing. Something may have been working for them in an ongoing way, but maybe today that kind of trade is not working. Instead of just digging in and being very rigid, trying to shift and think about alternative ways of managing that kind of trade.
And that, to me, that's a great analogy, and I'm glad you said that, because you're right. And the understanding of where you apply rigidity and where you apply flexibility, to me, is important. So I'm not sure this is a perfect analogy here with the tennis, but you've learned how to swing the racket and take a stroke, how you plant your feet, that probably doesn't change. But which stroke you choose to use in the moment, as you say, that you might have to change. And trading, to me, you have risk control rules. Those should be probably rigid at all times. That's what helps you manage your trading effectively and not get yourself into big trouble. However, knowing which type of trade from your playbook to use. Maybe today, you're using a reversal pattern and it's just not working. Maybe the market is just trending in a direction, reversals aren't happening. You need to shift gears and say, all right, I need to trade a different pattern that maybe you don't like as much or not as familiar with, but that's what the situation dictates. And being able to understand that in the moment, that's tough, right? Because especially if we come in and I know I used to have a bad habit and I still struggle against it at times where I look at the market before it opens and I'm like, oh my goodness, this is going to be X or Y type of day, right? We're going to the moon today. It's going up. And then suddenly we start, the market starts declining and I don't know what to do.
Yeah, because you've established, again, this gets to the cognitive, you have thoughts and beliefs about what the market's doing. Then all of a sudden, you're like, the affective component is now you feel like you're now already bummed out because you think it's going to be in a bad way. And then that may affect, like, you're not ready for certain trades to present themselves. That's the behavioral component because you have these kind of potentially faulty beliefs. Right. This is where it gets back to your point about what we've talked about not feeling helpless, but being flexible in how you see things and taking whatever action is needed within kind of your disciplined plan. But like you said, that's a delicate balance between having a process, being disciplined about it, but not being so rigidly adhere to it if it doesn't, when it calls for some flexibility and adjustments.
Right. So, when I tie it back to attitude, one of the things I've learned, and attitude, I think, is a learned behavior over time. You can improve your attitude and learn to approach the market differently. And it has affected my attitude positively, where before I used to call it, we use the term hulking, right? So to me, when you hulk, basically, think about the Hulk when he turns big and green, sort of his brain turns off, right? And it's just Hulk smash. Right? He smashes anything in his way, including friends and maybe the good stuff and the bad stuff. And I used to get that like that in trading. You'd lose a trade, and I just start pounding at trade. I start taking trade after trade, and then it's like you come out of the big green mode at some point in the future, and I look and I'm like, what just happened? Like, how did I lose all these trades? How did I allow myself to take these trades? They're absolutely they're bad trades. So the way I've modified my attitude to adjust that is be able to realize I just had a bad trade. It's not working well. It's that sometimes it's a physical step backwards and a deep breath. Okay, I can still do this. I understand how to trade. What went wrong in that moment? Okay, it's A, B, or C. I can address that. And I can approach this next trade sort of clean slate. What's the market providing me? Where's the opportunity? That's a lot harder to do than it might sound, right? Because you'd like to think you saw, all right, bad trade, move on. It's not so easy to move on all the time, right?
Well, because kind of a losing trade sets off a cascade of emotions. And then now people are often responding to their kind of emotional kind of situation and not looking at things more intellectually or rationally or kind of strategically in terms of their trading. And that's the shift I think that hurts people. A lot of times traders like to believe they're very knowledgeable and smart, and they are.
Right.
But if you're not aware of the kind of the emotional dynamic and the psychological emotional variables that play into decision making, then sometimes you minimize those, and all of a sudden you're making a decision based on logical, rational kind of information, but it's really more fueled by emotion. And if that emotion is frustration or upset or anger or disappointment, that's often going to lead to a type of trading that's not going to be successful. And so that's the delicate balance there.
I thought it was fascinating. I had a trader I was talking to that they had said that when they started trading, they had a mandatory 5-minute hiatus between any trades. So they were a fairly short-term trader, but they said, good or bad, once they completed a trade, they forced themselves to walk away for 5 minutes. And then come back, and then they could look at the market sort of fresh, because they had sort of come to the conclusion that they were unable in the immediate term to sort of calm themselves down, whether it was a good trade or a bad trade. If it was a good trade, they'd be all excited to be looking for the next one, and they come in with sort of unrealistic expectations without fully thinking through the trade. If it was a bad trade, it was almost like they'd go into a revenge mode. Now they're looking for a quick trade to try and make up the loss. And they said to manage that, they would give themselves this, like a timeout, a 5-minute timeout. And then over time, as they found they had better control of themselves, they were able to sort of, their attitude was they were able to sort of consciously manage it more. They diminished the time. They went to 4 and then 2 and then 1 minute. And then they were able to tell, hey, within like 30 seconds after a trade, wait a second, I'm not clear yet. Then they would be able to back off and go do other things. If they were say, yeah, I feel that I can think about this rationally, they would put themselves into the trade. What do you think about that as an approach?
Yeah, I think that's a great approach. And the key on that is that the practice makes perfect, so to speak, in that probably over time, that person can now manage several trades at once before they need a break. And also probably is managing the emotional volatility associated with winning and losing trades better. So when there's great emotional volatility of the highs and the lows, that is exhausting for traders. And so if you can narrow that, like trading on a little more of an emotional even keel, it just saves a tremendous amount of energy, and you don't feel like you're emotionally all over the place. It's also like if you think of the scale of like being really bummed out as a -5 and euphoric on +5, those people who are fluctuating between -4.5 and +4.5, first of all, that's exhausting. And also what you want to be, it takes a lot of work when you're down -4 to get back to 0, which is where you want to be in a kind of a more stoic, kind of flat, kind of emotional, engaged emotional state, but not either high or low. And I think that is one of the great abilities that successful traders have, is not getting too high or low on the wins or the losses, and just being able to kind of get back in. And that helps to evaluate the trade on its merits without the emotional components and psychological variables interfering, which they can do often.
Yeah. Well, that's. All of this is. I find sort of the key things that we have to sort of learn and experience for ourselves. Unfortunately, almost every trader I've run into. It's sort of like telling a child the stove is hot, right? You can tell that child 1,000 times, don't touch that, you're going to get hurt. But until they touch it and get hurt, then they can sort of internalize and say, that is hot, I shouldn't touch it. And I find with trading, we're often the same way. Like I know I was, and almost everybody I've talked to has been the same thing, right? You know what you're supposed to do, but to actually do it requires sort of that attitude adjustment so that you bring, because you've got to be your own. We talk sometimes when you're a retail trader, you've got to be your own risk manager, right? And that's hard to do because there is no one out there saying, wait a second, you're over your limit, you've exceeded your targets, whatever. I'm going to pull you back. It's really up to you, unless you set some automatic risk controls. But it's amazing to me, though, just even as intelligent, logical people that most of us are and most traders are, we still have to learn by that negative experience all the time.
Yeah, but what I think it's important for people to know is that this is an ongoing process. I know traders look at newer traders look at highly successful traders and kind of maybe sometimes think falsely that they got this, they have it down. There are no 300 bowling games in trading. There's no perfect game. This is an ongoing, and listen, this is the same thing in athletics. The highest level athletes are still working on their process. How did they get better? How did they manage setbacks? Traders, even incredibly successful traders that I work with, are prone to this. And the best ones are constantly trying to work at this, get better at it, perfect it. So I don't want anybody to either have the false belief that, how do I get to this, perfect kind of attitude, mindset, and achieve it, and then I'm in nirvana. It's the holy grail, because that's not realistic. And just to know that that's what makes this hard, but also makes it so intriguing. It's an ongoing journey and process to try to find ways that we can all improve both our mindset and our attitude.
Yeah, you just made me think of one of my favorite trading. I'll call it a trading novel. Is the Reminiscences of a Stock Operator, the story of Jesse Livermore, and who's often referred to as one of the best day traders of all time. Now he traded over 100 years ago, but he was at certain points one of the richest people in the U.S., if not in the world, but also went bankrupt several times. But
Right.
that innate belief in his ability allowed him to have the attitude he needed, to your point, to sort of bounce back from those scenarios and say, all right, like, I did wrong, but I do understand how to do this. I'm going to get back sort of on the horse and do it again.
Yeah, and this gets us back to the kind of original thing we talked about, which is this notion of responsibility, ownership, and accountability for your trading career. I think that's kind of where it starts. If you're really committed to trying to be good at this, something that's very difficult, then you kind of really have to own that. You really have to make a commitment to get better. And I think that that's a very personal, individual kind of commitment that people need to make during their quiet moments when they're alone, because nobody can make it for you. That's something that we all have to determine how important something is in our lives, and if trading is very important and you want to be successful, there's really no fast forwarding it. There's no, you need to get the reps, you need to put in the time and energy, you need to kind of own the pain and the joy, and enjoy the upswing and the joys and the wins, but constantly think about ways of getting better, of growing and developing others better skills as you move forward, even during those kind of dark periods, which there will be some, not because it's a problem, because it's kind of an inherent integral part of the trading process.
And agree with you wholeheartedly, and I think that's a great way perhaps to bring this to the close. You're right, this is a journey, and you have to accept the ups and the downs, and know that, with the right attitude, you can prevail. So.
Okay. Good talking with you, Peter.
Yeah, thank you, sir. Appreciate it. Have a great rest of the day, and we'll talk again soon.
Okay, be well, Peter. Bye-bye.
Bye.